Okay. All right. All righty, everybody. What is going on? What is going on? My name is Pete, but you probably already knew that. But in case you didn't, you guys are watching the one and only Paid to Drive and Paid to Drive vlogs coming at you day number 1119. It's time for a sound check, everybody, because YouTube's been cutting out that audio on me. All right, sounds good so far. What's up, everybody? If you are a delivery driver in this gig economy, you should be subscribed to this channel with all notifications turned on, everybody. That's right. So comment 777 if you've done that, 888 if you haven't yet. And of course, everybody, you guys know the deal. We're going for 100 thumbs up. So comment 111 if you smash the like, 222 if you haven't yet, because the likes are a little low. What's up, Sarah? What's up? I see you all in the chat. Please let me know if my audio cuts out, which it probably will. But in the off chance that it doesn't, you're lucky. And I'm sorry I haven't gotten to the point. All right, let's get to the point. I got to give a huge shout out to Buddha-san, one of our Pay to Drive correspondents. So the gig economy may be facing a big reality check. All right. I'm not going to read this entire article. It is very long. I will put it down below in the description, but just so you kind of get the point of what we're saying here. At the start of 2020, it looked like the food delivery sector was about to face a reckoning after years of raising and losing billions of dollars. One of the original food delivery businesses, GrubHub, was considering putting itself up for sale after losing its foothold on the market. Its competitors, DoorDash, Postmates, and UberEATS, had also reportedly been in talks about mergers. Meanwhile, Uber's CEO signaled a fundamental shift for its meal delivery service, focusing on profitable growth. Then the pandemic changed everything. The health crisis, paired with the economic crisis, created a perfect storm for the delivery companies. A large pipeline of the newly unemployed looking for work, countless people staying home and having food delivered, and restaurants increasingly dependent on takeout and delivery. Delivery services saw skyrocketing demand. Uber leaned on its Eats business as its core rides business plummeted. The valuations of Instacart and DoorDash soared as the company secured hundreds of millions of dollars in capital and expanded to offer deliveries from electronics retailers and convenience stores. A lead investor in the recent DoorDash funding round commented that the service had become ingrained in the lives of local communities as an essential service. Now, as the year comes to a close, DoorDash is about to ride that wave of pandemic-fueled demand to an initial public offering expected this week. The stars have aligned. This is basically the perfect time for last-mile delivery companies to go public. Lead said Assad Hussein, lead mobility analyst at data research firm PitchBook. Ticking off a number of reasons, including the unprecedented shift in demand from the pandemic, as well as recent consolidation in the sector. European company Just Eat Takeaway acquired GrubHub and Uber acquired Postmates, which means fewer companies are competing on pricing. Let's see. They've been an enormous beneficiary of the shift, said Samil Shah, who was an early investor in both DoorDash and Instacart, which is reportedly eyeing an IPO next year. I think both companies would have gone public at some point. I think it's unclear whether they would have gone public now without the pandemic. Maybe it would have been a bit later, but who knows? Airbnb, another on-demand company which struggled to right its business amid a steep drop in travel during the pandemic, is also expected to go public this week. Both companies are moving forward with their Wall Street debuts, just as the first coronavirus vaccines are expected to be made available to some in the United States and abroad. The vaccine rollout signals what could be the beginning of the end of the pandemic, and with it, yet another shift in demand. For Airbnb, the question is how much the end of the pandemic could boost business. For food delivery companies like DoorDash, the question is how much of the end of the pandemic will hurt it. People have gotten much more used to ordering food and other products through delivery services. Some of that will decline once it's safe to do things in person, of course. Said Scott Duke Commoners, an associate professor at Harvard Business School, but new habit formation is powerful. DoorDash, which raised $2.5 billion from investors, including SoftBank and Sequoia Capital, warned in its IPO paperwork that its pandemic boom may not last forever. The circumstances have accelerated the growth of our business stemming from the effects of the COVID-19 pandemic may not continue in the future, the company said. The company, which also owns Caviar, became the U.S. leader in terms of sales in 2019, according to data from Second Measure. But it took a pandemic for DoorDash to turn its first profit in the second quarter of this year, before reporting losses again in the most recent quarter. Delivery services like DoorDash have arguably had greater leverage during the pandemic, as many restaurants are more reliant on reaching customers at home, but the pendulum may swing the other direction post-pandemic. Commoners, who recently co-authored an article on the importance of a delivery app's relationship with restaurants and other suppliers, said delivery companies need to focus on better sharing revenue and tools with merchants to build sustainable businesses. The high fees that delivery services charge restaurants on orders have come into the spotlight during the pandemic. Some states and cities have capped third-party food delivery fees to aid local businesses. Companies have explored new ways to work with businesses. DoorDash introduced Storefront, a product that lets restaurants set up their own online stores where they are not charged commission on items sold, and self-delivery, a way for partners to list on its platform while taking care of their own delivery. The self-delivery is something that I mentioned like not too long ago. Remember that? And everybody, just a quick reminder, please hit that like button down below. Comment 111 if you hit the like, 222 if you haven't yet. And please subscribe down below and turn on that little notification bell. Set it to all so you don't miss these live stream updates. So I'm going to end the article here. If you want to check out the rest of it, the link's in the description. What's up, Zanaya? So basically, what I want you to take away from this is these gig companies, like I said in the past, they're not, forever is in, how do I put it? I feel like the gig economy will be forever, because the gig economy was a thing before the apps, but the point I'm trying to make is the pandemic made sales skyrocket because people were so dependent on us. But once it's safe or safer to go back out in public post-vaccine and this and that, I mean, we still have some time for that. But I do feel that things are, the sales are going to go back down again because people have been stuck inside. A lot of people have, and they want to get out. They want to go back out to restaurants. They want to socialize and stuff like that. So we're going to be taking the hit on that, sadly. So this is definitely a reality check for us, for the gig companies themselves. And this is just something we all need to face, and something that we all need to accept, that this is something that is actually happening, and, it may seem scary. I'm not saying that sales are going to go completely in the toilet, but now the thing is there's more drivers in the gig economy than there has ever been. I'm just curious, all of you that are watching, have you always worked in the gig economy for the past couple of years, even before the pandemic? Let's put it that way. In the chat or in the comments section, tell me, were you working in the gig economy doing delivery for GrubHub, DoorDash, Uber Eats, Postmates before the pandemic or after? So just comment before pandemic or after pandemic. I'm just curious what you guys think. Please hit that like button down below. If you haven't, the likes are a little on the low end. And I do want to take this time to thank all of our patrons over at patreon.com/paid2drive. Big shout out to Millard Norton, our ultimate driver at $100 per month. Unbelievably selfless and an amazing person. Very generous. Really appreciated. Very grateful for you, Millard. And of course, Kimberly Thomas, Tulsa Todd, Heidi Barnes, Kurt Paul, Brian Pomeroy, William Boudreau, Justin Case, Sarah Keston, Alan G. Van Horn, Scott Freisner, Drew Honor, Stephen Neely, Destiny Rudolph, Dave Chin, Frank Haviland, Jason Casta, Sherry Cassidy, Terry DeLong, Anthony Bliss, Nick G, Jenny Thomas, Matt Epperson, and Terrence Pacheco. If you guys heard your name, say, hey, Pete, I heard my name. If you didn't, say, hey, Pete, I didn't hear my name. So sign up, Patreon. And of course, guys, also make sure for free, sign up on the Get Upside Gas app. Comment 333 if you're on there, 444 if you have no idea what I'm talking about. Links in the description down below this video. Download the free app for your smartphone, pump your gas, print out your receipt, take a picture of your receipt with the Get Upside Gas app, and within 48 hours or so, you'll get anywhere from 15 cents to 45 cents a gallon back, which is pretty fantastic. And if a friend or family member signs up using your code, you'll get paid every time they pump gas. It's called Get Upside. Link is in the description down below. And of course, go get yourself a t-shirt, a hoodie, something at PaidToDriveStore.com. If you made it to the end, comment N635, N635. And of course, as always, get that money, get that honey, keep hustling and keep bustling. And we'll see all you guys next time right here on Paid to Drive and Paid to Drive Vlogs. Take care, everybody. We'll see you on the next one. Take care. Peace. Yes, sir.